Welcome to TradeTheMBI.com. This is Jonas Reports for the 21st. We got a nice little pullback to fill in, part of the positive extreme, not even a whole lot of it. No shock with that. That was that fading steel right here and dipping below the negative 13.5. That's going to create a little bit more softness, so there might be some additional selling in there. We're congruent with the shakeout, so that rising was fine. So again, nothing to get worked up about in any of this. The NASDAQ gave back quite a bit more and still has a little bit more to go to fill in the original breakout from that positive extreme. And if that takes place, that would be a real solid one. It was a real strong dip from its DOC. You can see that the fade off was a lot stronger and even produced DOC spread. So if the S&P is able to hold up the NASDAQ, that would be a bonus for them. But I would think that even if we get a move down to the 76, it's going to be supported, even with the soft readings that we're getting from here, because just a move of the short-term buyers back above the negative 13.5 would be enough to sustain it. Now, should that pivot back lower, then you would have to consider a reasonable break of that 76. So it's really going to present itself most likely on a 50K chart or intraday from that standpoint. So the ridiculous exuberance of treasury buyers got a little softened as they realized that, at a certain point, you're fighting against yourself when you're buying at those levels because the rates aren't changing in any way, shape, or form. And then you have to turn to oil. And when you turn to oil, there's no justification to be jumping into treasuries. What the reality is that that's going to continue to put pressure on inflation. And this is what you watch for, as well as the labor market and wage pressure increases. Those are the real factors that drive inflation. And as you witness those, they start to spread. So the fact that we were held outside of that normalized range and we pushed back up into the 80s, forget it. There's no reason the Fed is going to even modestly make an adjustment. The ridiculousness move of the euro fading back a little bit, no shock with that. This was just about positioning people who were heavily shorting euro to force them to have to move out of it. And now that they're done covering, you get the return. So it's just part of the game, back up and down, positioning against the majority. And you see the same thing happen with the hedge funds that got blown up recently from the market rise, because they were positioned heavily the other side, made it easy pickings for those that forced them to have to cover the position. And when they're gone, though, that creates a void and makes it much harder for the market to move to the upside. And then you get the return going the opposite way, in which case then everyone's a little late to the party getting out, and the cycle begins again. Welcome to mean reversion. I know it's an interesting thing to see and be part of, but it's much more normalized than it has been in a very long time. From a gold standpoint, a little softening right there, but again, I think that it's just a matter of watching where oil goes from that standpoint. Will certainly have the impact on pushing it back up if oil stays above, particularly if it gets into the 80 range. Definitely you'll see a spike back in gold. From a Bitcoin standpoint, again, no surprise with the softness. There's still positive extremes to fill on that. So it's just biding its time. A little bit of a move of the magenta crossing back over, even though white's leading, could be enough to hold that 61% range. Just not a whole lot of activity from that standpoint. All the enthusiasm from the XRP thing, fading off quickly as they realized it was much to do about nothing and really didn't resolve anything of importance. So I'm just going to continue to go sideways with that stuff. From the 50K standpoint, though, it took that beautiful long there, and then we ended up with the short. We had a little brief bounce from it, and then boom, came all the way back down. 23% held, even with the spike in the white MBI from that standpoint. And so we're seeing a little pop hitting the 50%. Magenta leading at this particular stage. The question will be whether red overtakes that, and then the pivot. Right now you get slightly 32.28 for red versus 32.07 for magenta. So where I'll look for that move will be the meeting of the DOC cyan and green here. Rejection with cyan popping back up would definitely mean that later move towards the zero, particularly if white spikes up. So that's how we'll see that one develop. But covered that one. Fine condition, perfectly turned out, just to be correct. The early morning intraday didn't really have anything to do with much, but you can see the spike started right at the pre-market, and then it was sold into pretty heavily, going through there as profit taking. Really flattened that out throughout most of the day, and then now they're just pushing it right back up to go against the late shorts that decided to add in at the end, because it's one of those where if you don't go with the reading when it first happens, trying to catch it later on sometimes becomes a foolish attempt. And I don't know why my screen has frozen a little bit there, but all it's going to show you here at the end of this move is a little bit of spike back up to this 76 level. And that's where we currently sit at this particular stage. And I would expect that will last until they've exhausted the short cover from the late shorts, and then it'll be up to buyers to come in to fulfill that, and whether they'll be able to sustain it. From the way the chart looks, they have a chance of holding on to it, but I think that you probably get some back and forth. I wouldn't expect it to explode or anything like that from here, because there just isn't enough positioning one direction or another. So that's the long and the short of it for now. As always, though, I'll update on the Skype chat. Trade well.